Or do you want to text her? I think there's water up in my office.
Water, I want a chocolate malt.
Yeah, that's right. I want a brew.
No, I want a chocolate malt, that's why, what I grew up with.
If you're talking brew, I'll buy.
A good old fashioned, Bronx made chocolate malt.
There you go. What about an old fashioned egg cream?
Oh, yeah.
Oh, those are
Now
good.
you're talking.
No,
Now you're talking.
I prefer ice cream soda, which is an egg cream with going back to our childhood, huh?
Absolutely. My grandmother, she made this thing we call ponche. And what it is you take eggs,
And every once in a while
Put them
it
in.
pops up.
right? Then turn around, put the sugar in it.
I left
And
mine
put
in my
in
other bag
a thing
downstairs.
called
They were
malta
upstairs.
duquesa. It's like a malt, but it's not really like a beer. And you put it in there, and then you malta duquesa. Okay, so it's like a malt, but it's really not a beer. It's not sold as a beer.
Okay.
And you mix all of that up with a little cream. Oh, man.
Look at that.
Thank
Un
you.
ponche.
Oh, thank you.
Sure, we make it
Thank
happen.
you.
When I was a kid.
This way we can at least talk.
And my folks bribed me to go get the lessons, by giving me extra quarters so I could have chocolate malt or an ice cream soda. That was the bribe.
Okay,
You can do the same thing.
we are ready to go.
Okay,
You've been breathing this for months.
okay. So, good morning, everyone, and welcome to the New York City Housing Authority's Audit and Finance Committee meeting. Today is June 11th, 2024. I want to apologize for the slight delay in getting started. Thank you to everyone for bearing with us. So we welcome everyone to this meeting. We're also welcoming our external auditors, Deloitte, who are present, and you'll be hearing more from them as the meeting progresses. So just a couple of reminders. The first is to please place all of your mobile devices on a silent mode or vibrate mode. And again, if you are a presenter, we want to let you know that, or to remind you to use your microphone. So just press the button to make sure that the green light is on when you're speaking, so that everyone in the room and those watching online can hear you loudly and clearly. And speaking of those watching online, this meeting will be streamed live, so it is imperative that we speak audibly and into the microphone so that everyone can hear all of our contributions to this meeting. So for the record, we're going to start with our roll call, and Anil Agrawal will proceed.
Thank you, Cassie. So, from the committee, the chair of the committee, Mr. Victor Gonzalez.
Present.
Independent committee member, Mr. Mark Kaplan.
Present.
Independent committee member, Mr. Richard Koo.
Present.
And from finance, we have Anika Lescott, CFO.
Anika Lascott Martinez, present.
Jeff Lesnoy.
Present.
From Deloitte, we have Jill Strohmeyer,
Present.
Darshan Patel,
Present.
Bobby Soni,
Present.
and to left to me, we have our VP of Internal Audit, Cassie Ward,
Present.
myself, Anil Agrawal, present. And audience, we also have Amita Patel, Ayat Lee, Pakon Ho, Maria Perez, Aline Nieves. From law, we have Jason Goldberg.
Present.
Okay, Mr. Chairman.
So from finance, you're missing David Sunshine and Judith Francis.
Oh, sorry. We also have David Sunshine from finance.
And Judith Francis.
and Judith Francis. Thank you. And of course, from the CEO's office, Special Advisor to the CEO, Vilma Huertas. Thank you. So we have the quorum in terms of the audit committee members, so we can start the meeting.
Okay, thank you, Anil. So, Mr. Chairman, we have a comprehensive agenda this morning. It is detailed, and we're going to start off with the first item on the agenda, which is going to be approval of the Audit and Finance Committee minutes of April 16th, 2024.
So moved.
Is that seconded?
I have a correction.
Okay,
On page 2, first paragraph, where it reads, it's the second line. There is a central indirect cost rate, and I would suggest deleting for purchase for personnel, the words for purchase for personnel, because I don't understand what that is. Where the city applies to the federal government for reimbursement. Period is fine. I would delete, since this was not, as far as I recall, correct, I would delete the next sentence or the next words which says, since NYCHA is not part of the city. Please delete that, because that is not correct.
Minutes of the last meeting.
And then, instead of I believe, it shouldn't take out I believe, because just say, he said, NYCHA is also eligible to apply to receive indirect costs reimbursement individually, period, that's fine,
okay.
okay? But I would make those corrections in the minutes, please, because I don't.
Okay, so we'll make those corrections.
Thank you.
Jason.
Yes. Jason?
I
Oh,
want you to call council.
we're calling council, up for,
I'm sorry. I'm sorry. Okay, fine, but I'm making editorial comments on it. Because there's no grammar here, okay? It says there is a central indirect cost rate. What is for purchases for personnel? What is that? No, I said before, I've said a fuller sentence, which said includes personnel.
But this part, not part of the city, and I believe.
I didn't say that either. I said that. I said since NYCHA is not part of the city.
Yeah, yeah. So it's page 2 of tab 2, top paragraph.
In here?
Yeah,
On the second page.
yeah, so yeah, top paragraph.
NYCHA is part of
We wasted time.
Yeah.
that, so
So you
I'm
need to say
amending.
that.
Okay, I'm
Say that
amending.
for the record,
Fine,
exactly.
fine.
Okay, say that for the record, and then amend the
So-
minutes, okay?
Okay, so for the record, I am amending, I'm suggesting the following amendments as I discussed to these minutes.
okay,
Okay, so we'll make those amendments. Okay.
Thank you.
So then we
So it's still a motion on the floor.
yes,
So we still have motion on the floor.
I second.
okay,
Does everybody agree?
Yes?
Yes.
okay.
Aye.
Very, very good, thank you.
Do you need to take an official vote on this, or from 3 of us?
Yes, I believe
A
so.
lot of time on trivial stuff.
No, it's okay. I'm fine with the decision,
No, I am too.
as long as they
Okay.
turn around and make the changes.
You make the motion with the recommendations.
Okay.
The edits.
So to clarify, we are making this motion to approve the minutes from April 16, 2024, pending those edits.
No, including the proposed amendments.
Yes.
Yes. Yes. Okay,
Okay,
So all in favor?
all in favor?
Alright.
okay. There we go. Okay, so the next item on the agenda is the New York City Housing Authority Annual Comprehensive Financial Report for 2023. And for that, I'm going to turn,
So, yep, Jeff will provide presentation on that.
thank you.
Good morning, Audit and Finance Committee members. Nice to see you again. I'd like to talk about the comprehensive financial reports for 2023 versus 2022. Before we get into the meat of it, I'd like to talk about some of the follow-ups to one of our last audit committee meetings, where we talked about GASB pronouncements. And we can talk now about the actual impact of that. So first, GASB 96, which was implemented in 2023, restated 2022. And this relates to subscription-based information technology arrangements, which the acronym goes as SPITA. So, simply speaking, this is software arrangements, and we were concerned initially that we might have a material issue here that required adjustment to the financial statements. And we browsed through about 150 contracts and determined that only maybe a dozen or so were relevant to the SPITA for one reason or another. So we recorded those. Ultimately, the cost of those was less than 10 million in 2023. And because these are treated as assets, capital assets, they're depreciated. So the actual net balance was $6 million in 2023 and a couple million in 2022. So nothing really material, but still requires disclosure in the financial statements. While we did not implement it in 2023, it was a big topic for 2022, so I kind of want to refresh this because it has a significant impact on the financial statements. GASB 87, the lease accounting rule, which we implemented in last year's financial statements retroactive to 2021. These still continue to have a very significant impact on the financial statements. Over $700 million of booked assets in 2023. For the most part, these are office leases. NYCHA that we're sitting in here, 250 Broadway, a couple of other offices. We have some mobile boilers, which are not particularly large, but still are recorded. All in all, over $700 million. And this will continue to depreciate over the years, over the life of our leases. So one other GASB that we looked at and talked about in our last meeting was GASB 94, public-private partnerships. So we evaluated this because we realized that we could have some potential transactions that looked and smelled like a PPP. But as we looked at this, we determined that we didn't meet all the criteria. We didn't meet the exchange-like criteria, meaning that a dollar was given for a dollar taken. And in the transactions we have, the PAC transactions, most of the compensation that NYCHA receives is in the form of a seller's note. We don't have experience in receiving much, if any, cash on seller's notes, so we don't have an exchange-like transaction there. So, for the most part, those were the GASBs that we looked at, that we adopted, that we determined whether it had an impact, and we booked where appropriate. So now talking about some of the highlights of 2023. And versus prior years, I mean, we've all talked about rent collections. You can see the trend on the slide here, going back to 2019 where we had $1,058,000,000 of rent collections. And you can see it start to plunge in 2020 with the onset of the pandemic, and plunged further as the years went by. In 2023, we have a blip, a very positive blip. We have $124 million of ERAP collections, emergency rent, rental assistance program. So we collected $124 million in 2023, and without those collections, it's about $904 million. So we do see that there are some positive things happening because our rent, our pure rent, directly from the tenants, aside from ERAP, is actually up by 4% in 2023. And that's despite a fairly large amount of PAC transactions where we spun off 5,200 apartment units to private developers where we're no longer collecting rent. So we've actually kind of hit bottom from the rent collections. We're starting to improve significantly. We're not back to the level we were in 2019. There's still some work to do, but I think from a financial perspective, we're going to see the impact on the financial statements. And from a rent arrears perspective, you can see on the chart how this corresponds, kind of the inverse relationship to the rent collections. We had $111 million in 2019, $439 million peak as of December 31st, 2022. And then it dropped in 2023, partially because of the ERAP collections. And that was partially offset by the fact that we still continue to build arrears in certain cases. So from a financial statement perspective, we'll see a couple of unusual things as we get into the financials. We'll see when we look at the statement of cash flows that the actual cash collected on behalf of tenants is significantly up in 2023. When we look at the statement of revenues and expenses, we won't see that same relationship because we anticipated ERAP collections in 2023 when we recorded our financial statements for 2022. So we adjusted our rent revenue and our allowance for doubtful accounts in 2022, expecting that we would receive significant cash in 2023. So keep that in mind when we go into the financial statements. You'll actually see that kind of relationship between the 2022 and 2023 line items. Always a highlight of a financial statements is pollution remediation obligations, particularly for lead paint. Last year, we talked about the fact that the city had changed the guidelines under Local Law 66 and moved the permissible lead from 1.0 milligrams down to 0.5 milligrams. So we had completely tested everything at that point in time, and we had a 28% positivity rate in our lead. But we had to kind of put that aside and start over from scratch. So when we had the opportunity to file our financial statements last year, in 2022, we were testing for the 0.5 milligrams, and our lead positivity rate was up to 35%. So I talk about positivity rate because this affects how many apartments are expected to have to be abated or remediated. So obviously this percentage affects the cost and the liability we place on our statement of net possession. So now we bring it forward one more year to 2023. We don't have any changes in the rules or laws, but testing continues. And, at the latest stage, we were up over 40% of testing of the apartments, but the positivity rate was 43% versus last year's 35%. So we base our estimates on the best data available at the time in the sampling of the population, but the population has increased in positivity rate. So what we're going to see here is about a $600 million increase in our pollution remediation obligation from last year to this year.
So it sounds like you show a positive impact in a number, but it sounds like a negative in another aspect. Because being that when they change the level of lead that's acceptable, that means we had to go back and do all that stuff all over again, even to apartments that had already passed the testing. So wouldn't that give us a negative impact? Because now we're redoing something we've already done.
Certainly. First of all, we incurred costs to test duplicate. We have to pay outside vendors for XRF testing. And we had to basically scrap, over $100 million of costs and start all over again to test those same apartments. So that's one impact in our costs on a pollution remediation obligation, which caused an increase there. The second is when I talked about the positivity rate, that's the percentage of apartments where we found lead in. So the higher that percentage, the higher the cost, because the more apartments it's gonna have to require abatement. So all those factors are causing the liability to increase.
Now, getting back to another topic. What happens to those numbers if any of these units that we're going back to do the lead testing now become RAD?
We deal with this on an annual basis, and we remove the liability at that point in time from our statement of net position. So we have hundreds of millions of dollars of liability in our obligation at this point in time, which we know are going to be removed as the PAC transactions take place. But the GASB 49 requirements say that we still have an obligation until we've spun it off to a third-party developer. So this liability, while it's correct, it also includes items which won't necessarily be there tomorrow.
Okay.
Okay, so we're going to do a little walkthrough of the financial statements. For the purpose of discussion, I'd like to show the statements out of order. Just for the record, the statement of net position would come first in the financial statements. It does in your package. The statement of revenues would come second. We're going to do it flip-flop on that. Okay, so let's talk about some of the individual line items. Operating revenues. They decreased by $86 million or 8% to $976 million. And we can see this on the chart or in your binders. And this is driven by the ERAP issue, which I described before, where in 2022, we anticipated over $100 million of ERAP recoveries to take place in 2023. So we reduced the allowance for doubtful accounts we had in 2022, and we increased the rent revenue. And yet the cash actually came in 2023. So this isn't necessarily a negative sign in the trend of our business. It's more just the accounting for the transaction. Operating expenses increased by $453 million, or about 10%, to $5.2 billion. And included within operating expenses are rent for leased dwellings, which increased by $211. This is the Section 8 program. So we have an increase in the cost per voucher. We have an increase in the voucher units. At the same point in time, this expense was completely offset in the Section 8 Housing Choice Voucher Subsidy. So if you could see where the arrow is on the screen, you'll see subsidies and grants. This amount, this $3.6 billion, includes a boost in the Section 8 Housing Choice Voucher subsidies. So while the expenses are up, the revenues are also up. In addition, we have some general reasons for increases in our operating expenses. You know, general administrative expenses and our maintenance and operations expenses. And some of those reasons include just inflationary increases, which we've seen in overall costs in the city and elsewhere. So that's not going to be something unusual, but inflation has been much higher the last couple of years. We also have some gross wage increases for various unions and other groups of employees, which, although they were processed in general in 2024, from a cash perspective, many of these were accrued in 2023, so caused an increase in our expenses. In addition, if we look at OPEB, which is other post-employment benefits, generally health insurance and welfare insurance, we're going to see an increase of $21 million due to a change in the discount rate assumption done by the Office of Actuary, where the discount rate last year was 4.31%, discount rate in 2023 is 4%. Depreciation expense continues to increase because we continue to make investments in capital expenditures and building improvements. And then partially offsetting all those above expenses is a utility decrease of about $38 million. If we look down in non-operating revenues, subsidies, grants increased by $378 million. One of the largest components of that is the Section 8 Housing Choice Voucher Subsidy, which I described before, up by $258 million. And that's a direct relationship to the expense increase that we talked about earlier. And we've also seen a $112 million increase in our public housing subsidy from HUD. And the City of New York subsidies are a little down from 2022, but nothing significant. Talking about some of the other line items on the financial statements, investment income is $16 million higher in 2023 due to higher interest rates, generally in depository accounts. There's a $17 million net loss on real estate transactions in 2023, primarily due to allowance for uncollectible accounts on certain loans and notes. And the positive change in fair value of investments on bond portfolio was $19 million in 2023, in contrast to a $42 million loss in 2022. And this is a result of midterm interest rates, which have actually dropped in 2023, and causing a change in how the portfolio is valued. The bond portfolio is valued on a mark-to-market basis. So these bonds were issued generally in the 1% range, plus or minus, before the pandemic, and rates skyrocketed after that. So the value of these bonds is much lower, you know, if you were to sell them on the open market. So we took a big loss on that on a mark-to-market basis in 2022, but because interest rates dropped a little bit, we recovered some of that. Now this is all a moot point if we hold these to maturity, and there's no gain or loss at all, but the accounting standards require that we mark-to-market this along the way.
I wonder whether some quantification of what that produced is appropriate.
Can you elaborate on what you're referring to?
What you're saying, the mark-to-market produced the value of the bonds. And we don't,
Oh, can you turn your mic on?
I didn't.
Now it's on.
Okay, you're saying that the mark-to-market reduced the value of the bonds. But since we're going to hold them to maturity, we will not have a cash loss at that time. is that point made quantitatively in this paper? I don't remember seeing it.
I am not 100% sure. We can look into that.
Because it seems to me that that's something that people should, you told us that, and it's a helpful thing to know.
And Mark, I would say there are differences between how FASB reporting entities must disclose information around held to maturity securities and available for sale securities versus how a governmental entity would record and disclose similar items in their financial statements.
No, I understand that, I'm just asking whether, I have it now, yeah,
You're not on.
not on.
It has to be
There you
green.
go.
Green.
FASB wouldn't require that disclosure in the notes to the financial statements. It's something that can be considered for MD&A purposes, but within the footnotes, that information isn't required
No,
under the FASB.
I'm aware of that. I'm also aware of the fact that the disclosure is important to indicate the real position.
Well, we could evaluate that and determine if we can put it in the MD&A. So we'll talk about that on the side.
Okay. Okay.
Any other questions before I move on? All right, interest expense is fairly constant, unlike the investment income, because our interest expense is based on fixed term, fixed interest bonds for the most part, or notes. So we're not gonna see a big change from year to year until we refinance something. The special item. This is pollution remediation cost, and this relates the change in positivity, in addition to potential change in other assumptions, which are relatively minor in the scheme of things. And the capital contributions, $1,093,000,000 in 2023, up by $287 million from last year. The biggest change here is the Federal Public Housing Capital Fund, which was $511 million in 2023, up by $184 million. We also have large amounts in capital contributions from the city and in FEMA. And lastly, before we go on to the next statement, the net position, $953 million, is down by $250 million from 2022. And note that if not for the special item related to lead costs, this number would have been completely upside down, $500 million greater than 2022. I have to correct myself, $942 million as of 12/31/2023. Okay, we'll look at the statement of net position. Total cash and investments, which is scattered throughout.
In white. 24.
Page 24 on
Yes, sir.
Alright, so total cash and investments, which is scattered throughout the statement in both the current and the non-current section, is $1,187,000,000 versus $1,284,000,000 as of December 31st, 2022. So it's a $97 million decrease in total, and largely due to continuing shortfalls in rent collections versus billed, some growing expenses, and some timing differences in reimbursements from the city and other grantors. Accounts receivable, net decreased by $154 million, which includes a $214 million reduction from FEMA, a $96 million decrease in tenant receivables, partially offset by $81 million increase from the city, and a $67 million increase from HUD. And the decrease in tenants receivable is primarily a result of ERAP funds received during 2023. Capital assets increased by $693 million to $10.5 billion due to continuing increase in building improvements. Note that these capital assets include $745 million net right-to-use lease assets and $6 million right-to-use subscription IT assets. Current liabilities are $1.49 billion, $121 million lower than 2022. Much of this reduction is due to decreases in the current portion of lead paint remediation costs due to timing differences versus prior expectations. So while the total pollution remediation obligation has increased significantly, based on the experience, we've kind of reallocated some of the current portion to non-current because we weren't completing the task as fast as we had expected. OPEB liability increased by $210 million, largely due to a decrease in the discount rate from 4.31% to 4%. And pollution remediation liability, non-current, increased by $723 million, largely due to the increase in lead positivity rate to 43%. And
I have a question, I've got it this time. On the pollution, on the pollution remediation obligations, that number is not the number we actually have to expect to spend over the period of time, is it?
well, it is the amount that we expect to spend over a period of time, but we keep in mind Mr. Gonzalez's question relating to the PAC developments, and there are future developments that are subject to PAC, which will ultimately come off when those transactions close. So this amount will be somewhat reduced over time.
But I'm looking at the fact that this number is unadjusted for inflation, right?
Well, that's correct.
So we know that this number is not the real number that we're going to spend, isn't that right?
Well, GASB 49 requires that we look at the current costs. So yes, we could have a discussion relating to whether it includes inflation or not. It does not. And ultimately, costs may be higher than what's appearing on the financial statements.
I come back to this, that looking at this, we know it's going to be more. We know it's going to be a lot more. And I suspect, I can't remember because I thought I saw something in here that said that this is the present value or whatever it is, but doesn't really reflect what we would expect to spend.
So, Mr. Kaplan, I just want to make sure we highlight two pieces. One, it does not include inflation, as you mentioned. And so, because as Jeff said, per GASB 49, you have to book it at the current cost. So there is that potential in the future that due to inflation, the cost is greater. However, to the point that Mr. Gonzalez and Jeff were discussing previously, we will also end up doing this for less units. So the cost will also decrease because when those units go over to the RAD Pact portfolio, they are no longer part of the pollution remediation obligation. So there's going to be those two factors. One, yes, will increase costs, but the other will decrease costs as well.
Well, again, as somebody who used to read these things from the point of view of deciding what would happen, would it be appropriate or even interesting, or can you do it, to say what you just said?
Sure.
Here in the footnote or someplace in the MD&A.
I think we could
I don't think we can do that.
we cannot discuss it.
In the MD&A, we can
Right.
possibly discuss that or lay out. And we do have points in the MD&A and even in the notes where we say that, these amounts may be different,
Yes,
the
I know.
estimates may be different because of inflation or other factors. But I don't think we can quantify what that dollar amount is.
Not, okay.
The other option is this could be a place for it to be discussed in the transmittal letter, assuming it could be quantified, but the transmittal letter is another place where you may want to consider adding something in the future.
So to Jeff's point, there is a note, we cannot quantify the difference between the inflation and the potential decrease in costs, but we could discuss in some appropriate place in the, in the narrative pieces, whether it be a transmittal letter or perhaps in the MD&A, those pressures. As Jeff mentioned, that is already mentioned in the MD&A, so we can just take another look at that section and see if we wanna add a little bit more color, context. But we can't quantify that because the rules require us to book it in the way that we have.
I'm aware of that.
Right. But we could discuss it in the appropriate place.
Okay?
I have a little question. If these units go off of public housing into red pack, why are they exempt from the city council requirement?
Well, they're not exempt from the letter mediation requirements, but they're not part of NYCHA's financial statements anymore.
Got it.
Correct.
Got it. So therefore, it's off of the financial from NYCHA, but it's moved into the financials of red pack.
Yes,
And we're still required, the developer is still required to,
Remediate
correct,
and to spend the money to reduce.
correct. It's just no longer our obligation.
Got it, thank you. And I want to address, after we're finished with this chart, I want to go back to the previous chart and ask about two things, if you, could we do that in a moment?
we can do that now. What is the chart you want to look at?
Well, the previous chart on that you started off with, revenues and operations, I had two questions about ERAP and about the city subsidy. The first question about the city subsidy is does that subsidy include the promised 2.2 billion over the 10-year period that the city was supposed to provide for remediation to NYCHA? Under the HUD agreement, they were supposed to come back with $2 billion over a 10-year period. Is that included in the current subsidy that we're getting now, or is that a separate line item someplace?
Well, if it were received and earned, it
Right.
would be included in this line item.
Right.
But for the most part, most of it has not been in
Oh.
2023 or 2022.
And when was it committed? In 21? It was committed?
It began, I believe, in the city budget in 2019 when we signed the agreement. And that amount is actually up to 3.2 billion now, because every year until we fulfill the requirements in the agreement, the city adds an additional 200 million.
So how much
capital.
how much money have we actually received from the city since the pledge of the 3.2 or 2.2 or whatever?
So it's done on a reimbursement basis, so as
So-
Jeff mentioned, we have to spend it first and then
Okay.
submit the reimbursements. But the
Okay.
funding is in the city budget, so it's allocated to NYCHA. And when we spend and submit the reimbursement, we receive it.
So it's a capital budget item
Correct.
to be captured over that period. But we've been spending money, NYCHA's been spending money.
We have, but in truth, we have not been spending that money quickly.
We haven't been spending it quickly enough to be able to get the money from the city.
Correct.
We can't send a bill to the city for this?
I mean, as fast as we can
I'm
complete
only
the capital
concerned
work,
about the fiscal year,
yes,
you know,
I
because
understand.
that, I don't quite understand how the city subsidy, which is done on a fiscal year basis ending June 30th, how that is in fact allocated back to the NYCHA, which is on a calendar year basis. I don't quite know how you split that money into, or how that money gets back into these financials for
Sure, Jeff can probably speak to that piece in terms of how we account for it, but the challenge really is we only receive it if we complete the capital work and ask for the reimbursement. So what Jeff is showing, and he can speak more to that, is the work that was completed and reimbursed for. As quickly as we can do that, in terms of the actual completion of the work, we will receive the money. But Jeff can talk to how they adjust for fiscal years and so forth.
Well, I mean, it's on a cost reimbursement basis.
Okay.
And for example, in the original 2.2 billion, there was somewhere in the range of 750 million, which was allocated to lead. And most of that hasn't been spent yet. And where it has been spent, the reimbursement process has begun, but it's not an instantaneous process to get the cash in. So I would say that very little amount of the 753 million is included in our 2023 financial statements. And that's probably the same for each component of the $2.2 billion, which was not limited to lead.
So we have to get the lead out, basically. Sorry. My second question is on ERAP. I don't understand what happened in 2022 that we didn't get the ERAP? Why did that not happen?
Sure, that's a really great question, Mr. Koo. So when the ERAP funds were given to New York State made a decision to deprioritize all subsidized tenants. So that included all NYCHA public housing residents as well as Section 8 residents. What we did over the course of 2022 and into May 2023 was advocate pretty heavily by going to Albany. Our tenants were at Albany, tenant leaders to say, hey, that's not fair that a subsidized tenant who is owing in arrears and had the same fiscal challenges during COVID has a different treatment than, the tenant across the street. And so we successfully were able to advocate on behalf of our tenants and with our tenant support, and we were able to get them to change that. And since then, the ERAP money has been flowing to our tenants. As Jeff mentioned, I think in his remarks, to date, we have received $154 million. And it's still coming in. And we've been able to credit about 145 or 46 million or so to actual tenant accounts. So it was more a function of New York State and the way that they chose to allocate and make rules for the ERAP program. But again, successfully, we were able to get them to change that. And Jeff, you can probably speak to how much we received in 2023 that's shown here.
Yeah, we had originally estimated that we would receive 116 million. When we finalized our 2022 financial statements, we were pretty close on that estimate. We actually received 124 million through December 31st, 2023. The number keeps on rising. I think we're kind of hitting the ceiling at this point in time. The last I checked, it was close to 158 million. Some of that may have to be returned to different parties, the developers, so we're still chalking up what the final balance will be. But it was a successful venture for sure.
Thank you.
And if I may, on the record, special thank you to the Revenue and Receivables Group. The Revenue and Receivables Group within Jeff's team in FARS, who were really diligent about working through all of the issues on ERAP and getting those funding here to the tenants.
Okay, so we're going to take a very quick look at the statement of cash flows. And I just want to point out the first line item, cash received on behalf of tenants. We see a large bump up there.
Page 26.
What page are we on?
26.
Also on the screen.
It's very difficult to see this one.
So if we look at the top line item there, cash received on behalf of tenants. See it going from 869 million to $1,023,000,000. And that's a direct result of ERAP monies, $124 million ERAP monies, plus additional 4% increase in our rent collections from prior year just due to normal improved activity and relationships. So with that, I conclude my presentation for New York City Housing Authority. If there are any questions, I'll be happy to take them. Otherwise, we can move on to the next item on the agenda.
Something, Joyce?
I'm just turning pages here.
Okay. Anil, is there anything formal you need to do here to move on?
Okay, yeah, so we will move on to now presentation by Finance Controller Jeff regarding financial statements for LLC 1, which is NYCHA Public Housing Preservation 1 LLC.
May I just turned the page and I'd like to ask a question on the document. There is a statement here that the collateral is held in segregated custodial accounts in the authority's name, and yet down below, the restricted deposits, doesn't say anything about how it's.
Oh,
So,
your mic, sorry, Mr. Kaplan. Did everyone hear that?
The accounts are fully collateralized, and yet down below on the restricted deposits,
so which document you are referring to, NYCHA Consolidated Financial Statements?
yeah, it's page 35.
Page 35.
It says the collateral is held in segregated custodian. I understand that. And then down below, you have unrestricted deposits. And you don't say whether that's collateralized.
It's all collateralized. It's either FDIC insurance up to the $250,000 limit, or anything above it is collateralized.
Well, but that's not stated here.
I think, Mark, if you look at the chart right above,
Yeah.
it says FDIC insured and collateralized, and there's a section for unrestricted and a section right below for restricted in the chart.
I see that. Oh, so that modifies the paragraphs below, okay.
Mr. Kaplan, anything else?
What kind of examples?
I tell you though, a major comment, you're missing a dollar sign on page 44. In the fourth line.
Bless you.
Bless you.
Thank you, thank you. Yeah, I see that.
Yep.
Okay.
Thank you.
Now, if you want to get in, let me get, on page 45, there's a statement among many requirements within, comma, within what?
Can you tell us exactly where you're looking on
It's
45?
page 45, and it's the the big paragraph. And it says, among many requirements within, NYCHA agreed to perform. There's nothing modifying within.
Within the agreement, it refers to this sentence previous.
I know, but it doesn't do it grammatically.
Okay, we can
Okay.
make that text edit.
Then, I'm not gonna bother with some of this stuff. Now, one thing I did notice, which is large, is the workman's comp, an enormous number. Is there anything being done about how the workforce is dealt with to deal with $500 million? Not $350 million charge. That's it.
I mean, this is based on actual claims and.
No, I understand that, but I'm just talking, when you look through the number and say, how is the place being managed when you can have $300 million worth of these claims that are to be paid, means somebody got hurt on the job. And it looked like, for me, this is an outsider. I'm not accustomed to seeing numbers of that size. It's not a financial issue, it's a managerial issue.
I think you raised an important question, Mr. Kaplan, and we can talk to, the folks in operations and management to get you an answer on that.
I would guess you're spending the money. The question is, how are you
Yes.
managing the thing so you have this much in the way of injuries?
Understood. We will add that as a follow-up.
Can I ask a question? On page 47, not a question, but there seems to be a typo. The paragraph, first of all, if you look 1, 2, 3, 4 paragraphs down, there's a number for the authority's liability for petroleum bulk storage remediation. There's something wrong with that number. It says 3323700. There's too many numbers there. Okay, and the chart says it should only be 3.2 million. And the text says it's a lot more than that, so.
Yeah, thank you, there's an extra 3 in a typo error there.
There's an extra 3 there, right?
We'll correct that.
Okay, number 1. Number 2, on workman's comp and on general liability, I don't understand what does charge to individual developments mean? Why are these costs? What first of all, is the reimbursement from HUD going to individual developments or as opposed to, NYCHA's overall central? I don't understand why it's charged to, why workman's comp and general liability is charged to individual. I don't understand what the term individual development means.
Well, that's our 200-something developments.
Right, so each one has a separate budget for workman's comp and for liability?
We're required to provide a financial statement called the FDS, Financial Data Schedule,
Okay,
to HUD for each AMP, which is made up of one or multiple developments. So they're just making the point that these are being charged to the development as required.
oh,
So all costs incurred at development need to be charged to a development. In addition, other costs that are incurred at the central office need to be allocated to developments.
okay, so therefore, if the workers' comp claim comes in from development A, B, C, those charges are being allocated to them?
Yes,
So one development could be spending all the workers' comp, right? Theoretically.
theoretically, yes, but, there are more than 10,000 employees.
Right.
And, some of these claims are for employees that are no longer even with NYCHA.
Oh,
So, yeah, they could be distributed in any way possible, but I don't think they're all sitting in one development. That would be unreasonable.
so it's where the incident occurs, I guess.
Where the incident occurs or where the estimates are expected to occur.
Okay, because presumably somebody from Central could be incurring a workers' comp claim
That's true.
if they, but I guess,
Let's stab with a pencil.
stab with a pencil. But if they're at a particular location, I guess that's where it's being charged to.
Yes.
If they're injured or something. Okay.
All right, I've got some picayune stuff too. On page 51, in one place you use the $, in another place you don't. I don't care about that. But there is this comment on the next one that was loaned to them. It says prior to the loan agreement, the authority had similar series that were loaned to them.
Which paragraph is this in?
Second paragraph, is that 52? On 52. I'm saying that the proceeds, two is to them. I couldn't quite figure that out. Here, 52.
Yeah. Okay, we'll
I'll
adjust
leave
the
you
line.
with that, and just another one, you have an et cetera in here, which I've rarely seen in financial statements.
Where is the et cetera?
1, 2, 3, 4, the fourth paragraph, third line, at the end, et cetera. You can't do that in a document.
Capital improvement primarily include building envelope, work on roof, brickwork and windows, etc.
Okay, thank you, we'll take a look at that.
Okay. Oh, I have a general question. When you talk about OPEB, the disclosures of these financial statements, are they the same as they are in the city financial statements? Or they're different?
They're what's required under the GASB.
No, I
They
understand
may not
that.
be identical. We don't necessarily try to replicate everything the city does, but we have something that's approximately the same. I mean, they probably have some more detail than we have. They have a much bigger number.
Not the lawyer in me.
Yeah, I think the city has, they have a funding aspect, don't they? Some of the assets that are held in trust for future funding, so there'd be some differences related to potential funding at the cities.
Okay. On page 82, it says due to the significant uncertainty of collection on these notes. You mean payment of these notes rather than collection?
Which paragraph are you looking at?
It's just above, it's the 1, 2, 3, 4 lines, 4 paragraphs down. It says due to the significant uncertainty of collection on these notes. As distinguished from payment?
Well, I think it's the same thing.
Okay, except the payment says something and collection doesn't. Okay, and I also want to point out on page 81, you have a whole bunch of payments without the dollar signs.
Yeah, on page 81, what are these four? What are these? 90-year leases for what? Audubon, Eden Wall, what are these developments or are these
These are,
acts or what are these?
these are former NYCHA developments that were transacted as part of PAC movements in 2023.
Okay.
Okay. Let me take you on to page 84 then, if you don't mind. The second paragraph, you say retain the right to reacquire the development in the future. The right of first refusal. You don't say that, the second sentence says something that the first one doesn't. When you put the right of first refusal.
Paragraph you want?
It's the second paragraph on 84. You mean the same thing, but you're not saying it. And let me just point out another thing here. You refer to in the big paragraph, 4 lines up, will continue to engage as partners. I doubt that these people are partners. That's a phrase that gets used, but it.
I'm sorry, where are you?
In the big paragraph on the page, 4 lines up, will continue to be engaged as partners. I doubt that they're partners.
You on page 84?
Yep.
Talking about under the trust,
I'm just referring to the fact that these people are going to be engaged as partners.
under the trust.
Yeah, and I know they're not partners.
Okay, we'll evaluate that.
Then, if I may keep bothering you, page 86, is in the end of the second paragraph, says incremental borrowing rate, depending on lease tenure. I'm not even familiar with what is meant by that.
Term.
So you mean tenure?
Sounds like-
Tenure.
Whatever it is,
Not tenor,
sounds like it's singing.
or term, lease term.
No, it may be it's a term of
Or maybe
art.
it's a specific real estate term that's used.
Depending on the lease tenor.
Yeah, my understanding is that's an appropriate word, but
Okay.
we'll verify that.
Maybe.
I mean, it's either bass or soprano, I suppose.
I was thinking that, so. Then if you
That it actually
if
does
you
work
go to
according to
page
Google.
87, you have the whole leases thing here without a dollar sign.
I'm sorry, Mr. Kaplan, where are you?
On page 87, you have the whole table, and you have the lease liability at the dollar at the bottom, but no dollars at the top.
Okay.
We don't need dollar signs there. That's not how we do any of the other tables. It just needs your one.
Anything else? Anything else? Can we go back to page 82 for a moment? Where it says, due to the significant uncertainty of collection of these notes, why is there significant uncertainty there? Why are the notes not gonna be paid?
Well, that's a story that is less of an accounting issue and more of an economics issue. We've had more than a dozen, prior to this year end, 2023, we had more than a dozen PAC transactions. And only one of those transactions resulted in any significant collections on the seller's note. That's Baychester Murphy. So we don't have a track record of receiving this. And in fact, on many of the newer seller's note in the PAC transactions, we have little expectation we're gonna collect any cash on the transaction.
Oh, you said that in the document.
Yeah. So why, I can't necessarily explain the reasons why, but the economics of the transaction don't really provide enough cash flow for the developer to pay off the loans.
That's what it said.
From the tenant revenue or something, whatever.
And that's even a bigger issue these days with the higher interest rates. Where they're paying off their first mortgage at a very high interest rate.
Yeah, but that absence of funding affects the programs, no? I mean, what, the question I have is what is being done to try to collect that money? I mean,
Well,
it's an obligation, it's a legal obligation
I mean,
on the seller's note.
I'll just make a general statement,
Yes,
that the seller's notes are not based on a fixed amortization schedule. They're based on cash flow.
Oh,
You know,
right,
X% of cash flow,
right.
excess cash flow, positive cash flow will be remitted to NYCHA. So if there's no positive cash flow,
There's
or there's much less than expected
no
originally,
payment of the note.
then NYCHA doesn't receive anything.
Oh,
And that carries through to what at maturity?
well,
At maturity, they're due, but they're not necessarily going to be paid.
Pay.
because there's no positive cash flow.
No, I understand. That one I knew. I figured that out.
I know,
Check
but,
is in the mail.
Huh?
The check is in the mail.
oh, okay, yeah, checks in the mail. Thank you.
Oh, I probably, did I say this? On page 81, you refer to development partners. And partners carries with it legal obligations.
That's correct, these are the legal development partners.
So
So-
they have partnership liability that way.
Yes, so when we do a PAC transaction, there's a formal request for proposals, and so we select actual development partners in the true sense of the word.
Right.
And they're various sort of, each deal is structured differently, but yes, they are true partners in the
Okay, so
deal.
people generally use that word.
Yes, they're real partners, not like in the previous one that you pointed out.
You have a heroic task here.
Well, we're up for the challenge.
Okay, any other questions on the New York City Housing Authority Annual Comprehensive Financial Report for 2023? If not, we'll move on to the NYCHA Public Housing Preservation 1 LLC Annual Comprehensive Financial Report for 2023. And we'll make all of the motions related to these two reports at the end.
Okay, that was another one.
Okay, so as with New York City Housing Authority, we're gonna start with the statement of revenues. Do a quick walkthrough of that. We will see a lot of the same common factors that we talked through on New York City Housing Authority. Things like pollution remediation obligation, tenant collections, inflationary costs, et cetera. They're all present here. So if we look at the tenant revenues, you'll see a drop. You'll see a drop of substantial amount of funds, about $5 million of funds. And this is largely due to the adjustment we made in 2022 for the expectation of ERAP collections. So we increased the revenues in 2022 by about $10 million with the expectation we would collect those monies in 2023, which we did. So actually, when we look at pure cash flow, and I'm gonna flip on the screen to cash flow, we can see that cash flow for tenants increased from 76 million to $93 million. Total operating expenses are up by 8.4 million or 3.6%. Largely due to general inflationary increases and gross wage increases. Subsidies increased by 10.6 million. 6 million due from the Section 8 Housing Choice Voucher Program, with most of the remainder of the increase from NYCHA subsidies. And we have a special item in the center of the page here, which, as in NYCHA, pollution remediation obligation, and relates to the same positivity percentage increase in lead count. So we have about $80 million there.
$13. So in section 4 of the blue binder, we're on page 13.
What page?
13. 1-3.
before I move on to the statement in that position, are there any questions?
I just have questions on some wording on page 4. Page 4. Okay. There's the statement of the revenue. Okay, in the overview of the basic financial statement section, the second paragraph says the statements of revenues, expenses, and changes. It says all revenues, expenses, and changes in net positions are reported on the accrual basis of accounting, which reports the event as it occurs, rather than when cash changes hands. Isn't that the same? Doesn't that happen at the same time?
No, Jeff can.
Okay, so please, break it down for me.
So if we look at a very fundamental type of transaction
Right,
where we order pencils, we use Mr. Kaplan's example. We order pencils and we receive the pencils for $10 on December 31st, right? And we don't pay for this till the following year. We don't even get an invoice till the following year. The accounting requirements are very, very clear that we need to accrue for that in the year where we ordered and received the goods or services. So that's kind of a basic example of that
Put
concept.
a point on that. Oh, not bad.
I'm just so accustomed, okay, I bought something, here you go. It happens at the same time, okay. All right.
All right.
Can we put any numer over here?
I want to ask or make a couple of comments here on this one. You find out what I have. Oh, if you will look at page 17, I think the tenses, it says requirements and statements are effective. And you referred to something that's 2022 in 2 places. It should be were effective.
And Mr. Kaplan, I need to catch up to you. Where are you?
It's page 17, under recently adopted accounting standards, second paragraph. This requirements and statement were effective, not are. And the same thing 2 paragraphs later. I'm gonna fuss with the grammar. Then,
I'm the wrong document.
one thing, just as intellectual, the capitalization of threshold for buildings is,
What page?
page 19.
Mr. Kaplan, can you give us just 1 minute to catch up to you? We just wanna make your prior edit.
I can give you the pages, but the capitalization threshold on buildings is $50,000. That really so?
I'm sorry, is there a question there?
I just, you show a capitalization threshold as $50,000.
Right.
I would have thought it would be a bigger number.
And that's our policy.
Okay. Oh,
It's Gatsby.
now I can't, and now when you get the deposits on page 20, it had a carrying amount of 29 million and a bank balance of 27 million. And the same thing is, no, they're exactly the same in the first sentence. What accounts for the bank balance being different from the carrying balance?
I mean, this is a bank reconciliation process where the bank statement has a different amount than our general ledger because of the accrual concepts. So you know, if we actually issue a check on December 31st, it doesn't clear the bank, it's not gonna be reduced on the bank balance, but it's gonna be reduced on our carrying balance, on our general ledger balance.
But it's just the other way around, you have a bigger balance carrying amount and a bank balance.
Yeah, I mean, there are many different transactions
Okay.
which create differences between the bank balance and the GL balance.
Okay.
There's a reconciliation process that takes place in order to ensure that the accounting is correct, even if the bank balance says something different.
All right, then on prepaid expenses, I assume you want were rather than are. I'm not gonna bother with expenses. Oh. On the HUD agreement, what's PHAS? And is it defined someplace here? I didn't notice.
What page?
Yes.
So page 33, second line. Where is it defined?
Sorry, what is the question on
On
33?
page 33, the second line says PHAS. I don't know what PHAS is.
So
And I don't think it's defined someplace in here.
we can add the, you're right, I don't think it's defined, or perhaps it is. So it's the FOS inspections, which are HUD required inspections. I believe FOS is Public Housing Assessment System.
I'm sure there's a reason for it.
Yeah, so
just-
we'll define
just-
it. It's
Just
a
in
good
the
call.
letters, you don't know what you're talking about.
Yeah, we'll define that term.
I'll wait till they finish. I got something on page 16.
Could we go back to page 17 for a second? We're at GASB 96. Can you give me an example of what a subscription-based, information-based technology arrangements is? That's like a long sentence for something. What is it?
Well, it can be any software services provided by a vendor,
Any software services provided
by a vendor.
by a vendor. So what,
So in theory, it could be Microsoft Office,
oh,
could be, it could be
Google.
Workplace,
huh?
could be Workplace, Workday, could be Kronos, could be Teams, it could be anything. I mean, just because there are software services doesn't necessarily mean it qualifies as a subscription-based information technology arrangement. But it first needs to be software services, not maintenance, not training, but software services.
So, in general, how big of a scope is this NYCHA wide?
We reviewed about 150 contracts,
150 contracts.
right, which were potential inclusions as speeders,
Okay,
right? We determined somewhere close to 10 or 12 of them were qualified.
okay,
So we only reflected 10 or 12
okay,
on our financial statements.
okay.
And that net value was about $6 or $7 million as of end of 2023 after depreciation.
67 million.
So six or 7 million.
Oh, 6 to 7, okay. Okay, so
So it wasn't a material item, but it was still something that we reflected and disclosed.
the portion allocated to LLC 1,
LLC one doesn't engage directly in these contracts.
Oh, so, but it's described in 17. So that's just in general policies?
Yeah,
So it doesn't have anything to do specifically with,
we're required to identify what
Each GASB item.
the accounting standards are, what's been adopted.
got it,
And we need to be in position to implement it if the situation arises.
got it. Got it. So this is just descriptive of different GASBs? Okay. Okay.
I'm looking at you. If I were the lawyer here, I would tell you to tear up those pieces of paper that you're writing, because they're only evidence.
I got something on page 16. So, under organization, the very first paragraph,
What page?
page 16. Okay. In that very first paragraph, I wanna understand something. When you talk about the managing member that has the 99.99%, in the rest of it, it says that in July of 2013, the LLC one was assigned to Wells Fargo Community Investment Holdings. Now, first of all, do we just switch people in midstream? And if so, who does the assigning?
Well, I mean, just to clarify, the managing member is New York City Housing Authority. And we own 0.1%. So the investor member owns 99.99%.
Right, so, okay, my error. The 99, it was Citibank and until July of 2013, right? Then it says, when its interest in LLC was assigned to Wells Fargo. So what do we, midstream, we just switch, and who assigns that switch? You went from Citibank NA to Wells Fargo.
Yeah.
Who did that?
So to be honest, Mr. Gonzalez, we don't have the details going back to 2013, so we could check with our legal department.
It's,
But the investor member is likely the one that's responsible for assigning it from Citibank to Wells Fargo, not NYCHA. But we will confirm that because they're assigning their interest to another party.
okay.
We are not the investor.
We're not in control of that.
Correct, but we will
Because we're the
just,
1%.
the 0.01.
0.01%, sorry.
But we will confirm this with legal because they might have details going back to 2013, we don't have those in front of us.
It would surprise me that you could be faced with another partner, another participant without your consent. No, I just can't imagine
just
the
not sure.
idea that you get from one bank to another, and you have no control over who your, use that word, or work partner turns out to be.
Well, we need to look into this further.
No, I think,
But
We'll
while
take
we're-
those
for
follow-up.
financial statement purposes, it doesn't mean much to them now, but if you're asking, how does you wake up one day, you got a different partner?
Exactly.
And who controls who that partner is a fair business question.
Okay, while we're on the subject, we were going to address this near the end of the discussion. There are currently negotiations going on between Wells Fargo and NYCHA in order to separate and to repurchase the interest from Wells Fargo. This would be in the beneficial interest of both entities, and it's a deal that's not yet closed, but it's possible it could close in the third quarter of this year.
So that's the,
So it's an aftermath. I mean, in other words, you're doing the deal after it's already been done?
Well, I mean, companies can sell interest to each other, and we can repurchase, we have the right to repurchase the interest from Wells Fargo. It would
And
be-
without our permission?
No, it would be agreed upon by both parties. It hasn't happened yet. There's still discussions going on relating to what the terms are and what the tax consequences are, but it's likely that it will occur in the third or fourth quarter of this year.
just out of curiosity, how much money is involved in that kind of transaction?
I mean, it's a nominal value, you know, it could be $1 to $2 million. But that's still up for negotiation. Depends on the tax consequences.
The taxes, yeah. This was a great tax game, and I congratulate whoever figured it out.
Well, we don't benefit from the tax situation. This is our other partners.
Well, but they wouldn't be in the economics if they didn't get a tax benefit.
Correct. Shall I move on to the rest of the financial statements?
Yeah, just clear that up for me, just for me. Okay.
So I guess just to make sure that Mr. Gonzalez gets the answer to the question. So if we are successful in the deal, then NYCHA would be the 100% member of the transaction, of the deal, and Wells Fargo would exit. And so what we're trying to figure out are the economics, the tax implications, and we're working with Wells Fargo to do that. So on the question of who owns what percentage, we currently have the 0.01%, and after the deal, if we're successful, we would have 100%. And we'd be in full sort of control, not just managing member, but full membership interest. So there wouldn't be another entity in that deal with us.
That's now in the future. So
Right.
this already happened back in 2013.
Correct. So
And
that's
now
how it
we're trying
is
to-
today.
And now we're trying to fix it, so to speak.
Or we're just trying to,
Yeah, it wasn't broken at the time. It worked for the years that it took place. And now we need to change because of a couple of reasons.
It's 11 years later.
I mean, and really, in the interest of our ongoing PAC developments and conversions, it's much easier to own 100% of the entity and then enter into a PAC conversion for the developments. So right now, our hands are kind of tied until we take care of this.
Okay, that makes sense. Okay.
thank you.
Right, so
It's the law, the rule of unintended consequences.
okay, so onto the statement of net position, which is on the screen. For LLC one, cash increased by $4.6 million. Much of this is due to the replacement reserve, which continues to build, which NYCHA funds for capital improvements. Capital assets increased by $17 million. Local law 11 work, facades, brickwork, roofing. NYCHA liability increased by due to NYCHA liability increased by $32 million. And this is a symptom of LLC one's cash flow constraints. So they've been affected as NYCHA by tenant rent collections being down, expenses going up, and they've had to slow down their repayments to NYCHA. So this is kind of a liability to NYCHA at this point in time. We have an increase of $66 million in total pollution remediation liability due to the increase in positivity and lead rate. And that pretty much wraps it up. So I think from a presentation perspective, we've completed unless there are any questions.
Well, I have one minor one, and that is in the prepaid expenses. The R probably should be more, but more importantly, I don't think we were committed to being the audit committee of the housing preservation group. So I don't mind, but I don't think that we ever were told that we were going to be the audit committee for one of these guys.
For what?
For LLC one.
It says that this is the address to the board of directors and the audit committee of NYCHA Public Housing, LLC.
You wanna speak to it or?
And as I understood it, we were the audit committee for this entity, parent. And I don't mind if we do it, but I think you need to do something, what our remit is.
So Vilma and Jason can probably speak more to it from a bylaws perspective, but LLC one, and formerly there were two, right? There was LLC one and LLC two have always been a part of the NYCHA annual statement. So this is not a new thing.
What's
and
new is that we refer to us as the audit committee for the housing for this specific thing. And I don't mind, but I think you,
Is that in the
Is
transmittal?
that in the letter or?
it's
It's
in
a
the,
letter from Deloitte.
That might be my.
Oh, okay. Oh, I see, you're talking about the letter being.
yeah,
Correct, okay, that can be corrected. It just says here, like, the board of directors and audit committee of,
we've never functioned as an audit committee for this enterprise.
we'll speak to Deloitte and we'll get back to you.
And then the word, you can give them prepaid.
And we can also check on the bylaws to see if it makes any mention of it. But this is how it's been for years, as far as I know.
That's the first time I've seen anything that says it, therefore I raised the question.
It's a good question.
Okay, well, thank you.
Thank you.
I tell you, when I look at the complexities that are inherent in what you folks do, and that you keep track of it the way you do, it's a heroic job. And I think, I'll probably speak for all of us, how much we appreciate the quality and the work that goes into it. And it ain't easy.
Well, we appreciate the recognition, Mr. Kaplan, and I really have to give all the recognition to this team out here and the people that report to them. They do all the work.
I didn't mean to restrict it to those at the table.
Well, that's also a very good segue to our next agenda item, which is Deloitte's Audit Committee letter and management representation letter for the 2023 audit.
I think we're gonna do that after everything. Or are we doing the motion first, or are we doing the
Where
motion
do we
after
do the
this?
motion for the statements?
You have to have a motion to
So
accept
should we
it.
do the motion for the,
Yes.
Financial statements?
Okay, so before we move on to Deloitte, we'll actually do the motion for the financial reports. I think that last year it was taken as two separate reports and there were separate motions made on each one, so we'll do that again this year.
Is,
Okay, so now that we've listened to the financial report, we'll take NYCHA first, the annual comprehensive financial report for 2023. There's now a motion in order to recommend approval of the audited 2023 financial
So
statements for
moved.
the board.
Second.
Okay, very good. All in favor?
Aye.
Okay, very good. And next, we will take the second report that we just heard about, which is the NYCHA Public Housing Preservation 1 LLC, the annual comprehensive financial report for 2023, and a motion is in order to recommend the approval of.
So moved.
Okay, very good.
Second.
Okay, all in favor?
Aye.
Okay, and now we will move on to the next agenda item, which is Deloitte's Audit Committee
Do you
letter.
have to, in your motion, do you have to say 23 and 22, as it says on the cover page?
Well, we can say that if that clarification is needed, but I'll defer to,
I apologize. Do we need to say 2022, or is it just 2023 being approved?
2022 is restated, so I
The
think we
cover
have to
says
say.
it.
oh, okay,
We have
okay.
to say both.
What?
So, all right, since the 2022 is restated, and I think that's just for,
It's for both.
okay, actually, it's for both, okay. So then we will redo that, so we'll go back to the New York City Housing Authority Annual Comprehensive Financial Report for 2022 and 2023. Motion in order to recommend approval of those audited financial statements for the board. Do we have that motion?
You do it this time.
So moved.
Okay, okay, all in favor?
Aye.
Okay, and then for the NYCHA Public Housing Preservation 1 LLC Annual Comprehensive Financial Report for 2022 and 2023. Motion is in order to recommend approval of those financial statements for the board.
So move.
Okay,
Second.
all in favor?
Aye.
Very good. Okay, now we will go to Deloitte's Audit Committee letter and management representation letter for the 2023 audit.
All right, good morning, almost lunchtime. So I want to start, before I dive into tab 5, I just want to address Deloitte's audit opinions for both NYCHA Maine and NYCHA LLC. They're in the white book as well as tab 4. Simply put, these are unmodified opinions for both of these entities for the year ended December 31st, 2023 and 2022. Both of these so a clean opinion. Both of these opinions look very similar to last year. There's really only one change, and that relates to NYCHA's opinion. Last year, we referred to the adoption of GASB 87 for leases, and this year we're referring to the adoption of GASB 96 for the SPIDAs, as Jeff had mentioned earlier in his presentation. So that was my first item, both opinions clean and look very similar to last year. All right, before I get into the presentation on tab 5, I would like to just say thank you to a number of folks. First, I want to introduce and thank the Deloitte team to my right. We have Bobby Soni and Darshan Patel, who are leaders on this engagement. Without the efforts and dedication from both of these individuals, the completion of this audit would not be possible. We also have a few folks in the audit room here today finishing up some last minute things. They're watching this as live right now, so thank you to the Deloitte team members sitting in the audit room completing our final tasks. And then finally, thank you to all of the NYCHA management team, Anika, Jeff, Vilma, and all of their team and crew. Thank you for getting us all of the audit evidence and support we need to bring this to completion as well. All right, so I'll take you through tab 5 of your book today. This is Deloitte's required communication letter on the results of our audits this year. Just to remind the committee, Deloitte performs their audits in accordance with 2 sets of standards. We follow auditing standards issued by the AICPA, as well as auditing standards issued by the Comptroller General of the United States, government auditing standards. We expect to issue our reports final, likely Monday of next week. We have a few final procedures that we need to complete before Monday. On page 2 of this letter details the responsibility of the auditor underneath both sets of auditing standards. We have gone over this before in our planning communication meeting, so I won't go over it in great detail here, but it's here for your reading. Turning to page 3 of the letter, the significant accounting policies for both NYCHA and LLC1 are set forth in note 1 to the financial statements. We are not aware of any changes in previously adopted accounting policies except for the adoption of the new standards 94, 96, 99. Accounting estimates are an integral part of these financial statements that are prepared by management, and they are based on judgments of management. In Appendix A to this document lays out some of the more significant accounting estimates and some of the assumptions that management had in determining amounts recorded in the financial statements. The purpose of our audit of the financial statements is to obtain a reasonable, not absolute assurance about whether the financial statements are free of material misstatements, whether caused by error or fraud. But I am happy to report that there are no uncorrected misstatements or disclosure items passed that impact either of these audits. In addition, we did not come across any items that were material that were corrected by management. So no uncorrected misstatements and no materially corrected items. We had no disagreements with management throughout the performance of our audits. So we had the full cooperation of all the management team of NYCHA as well as the executive management team.
Excuse me, I have to step out a second. It's accessory.
Sure.
I'll be right back.
In the September meeting, Deloitte will plan to issue a separate report to you, also dated likely Monday, about certain matters involving the authority's internal control over financial reporting and other matters that we have identified during the performance of our audits. This will be the management letter comment. Also, in September, we will be in a position to report on the results of our single audit, which is due to be filed before September 30th, 2024. At the back of this letter is attached the management representation letter for 2023. This is a key piece of audit evidence that Deloitte is required to receive from NYCHA prior to the issuance of our opinion. So we will need to receive this back final and signed by management before Monday of next week. We had track changes from prior years, so it's for the ease of the committee members' review to see exactly what has changed in this rep letter from last year. I will say most of the changes are rather simple, grammatical changes, slight wording changes. I'm just gonna highlight the one or two that did change the more significant. Number 26, or right around 26, last year there was a representation letter, or representation in this letter related to a net investment in capital assets item that we had worked through last year with management. That was not something that was needed in this letter this year, so we removed that representation. And then prior reps related to GASB 87 and 91 have been replaced with GASB 96 and GASB 94 language, reps 31 and 32. Other than that, I don't need to highlight any other representations.
Well, first of all, let me point out that on page 3, you have a footnote that the agreement, and you have the exact same footnote on the next page. So why do you have it twice?
I think it's just whatever that footnote is on the page, that particular page, the footnote is also carried down to the bottom for ease of review by the reader. And I should mention to the committee that management is in the process of reviewing this letter. There could be subsequent modifications, corrections to this letter as a result of their review.
And then let me just see here. I had a couple of other little bits and pieces. Oh, one of my favorites, the capital V of the city of New
I
York.
knew you were going there, Mike. You got it.
The first page, the city's name
It's
is,
only been 20 years. I should get it right by now. So while my presentation was rather brief, we have been in the field since February conducting this audit. So it does take several months for the Deloitte team, the NYCHA team, to get through the audits of these two entities. So once again, thank you. And if there are any other questions on the results of the audit or the opinions or the rep letters, happy to field them.
tell me something. In 35, we provide you with a corporate entity tree. What is that?
We just need to understand what other entities would fall under NYCHA. For instance, LLC 1, LLC 2,
That's
and
what the concept of the tree is.
that's the concept of the tree, yes.
Let me point out too, that in note 38, you refer to liabilities disclosed, oh, the financial statement, sorry, it's not the paragraph here. And in 57, I will say that all expenditures that have been deferred to future periods are recoverable. What does that mean? Expenditures are recoverable.
Just means that they'll be amortized in future periods. So if you have a deferred charge on your financial statements, it will be amortized into expense in future periods.
So
Kind of like a prepaid expense, that's what I would call it.
the difference between when you say expenditures have been deferred, that says the actual expenditure or the accounting for it?
The accounting for it.
Well, this says the expenditures have been deferred.
Understood. This wording needs to be updated, we can do that.
Yeah. Okay.
Mr. Kaplan, so as Jill indicated, management has reviewed this and provided some updates to Deloitte. Wasn't probably until late Friday last week, so it hasn't been integrated into this yet, and it might be subject to further negotiation.
Good. I remember the first time I had to sign one of these things as a CEO.
Just cross your fingers.
Are you saying handshaking?
You bet.
Okay, anything else on Deloitte's, audit committee letter and management representation letter? If not, we can move on to our final agenda item, number 6, which is Deloitte's status update on the 2023 single audit, compliance audit.
I'm gonna turn the presentation over to our,
Jill, can I ask a question?
Sure.
So there's no material finding at all in this letter?
that's correct,
None?
none. Related to the financial statement audit.
Right.
We are still in the process of completing our single audits. Any findings that may result from the single audit work will be communicated to you in the September meeting.
Okay, so as far as this is concerned, there's no material finding?
Correct.
Thank you.
So at this time, I'm gonna hand the presentation over to Darshan Patel, who's our senior manager on the single audit and compliance expert. So Darshan, you'll take them through our update on the single audit.
So I don't have much updates on that from last time, but we're still doing 3 programs this year, public and Indian capital and operating, and the community development program. So these are the 3 programs we'll be testing. Still the issuance date is September 30th. We have requested documentation and management is still in the process of providing us the documentation. That's all I have right now.
I'm sure we appreciate the brevity.
Okay, we're going to just pause for a second before we can conclude our business.
Well, let me tell you something, which I like to do, but I don't know if we do it here. And that is I, and every other audit committee that I'm on, we exclude management, we tell management out of the room, and the audit committee discusses privately with the auditor what we think. And then what I also like is to have management route the auditors to find out what management thinks of the auditors. And I think you'll find that's common practice now, in certainly corporate boards. I don't know if we do that or not.
There needs to be an
Call
appropriate
counsel.
motion in accordance with open.
There's a specific motion in
Go
this.
into executive session.
Would it be considered executive session
Well,
if they just wanna talk to the auditors without us?
I wait for the chairman to find out how.
If there'll be a
Yeah.
quorum of the committee, that must be in accordance with the open meetings law.
Okay, so why don't we wait until the chairman gets back and the special advisor to the CEO gets back, and then we can see whether that's something that we need to proceed with or look into further.
You know, I had my eyes done, first time since I'm 7 years old, I'm not wearing glasses. And I can't see that.
Oh, I can't see it either.
I have to decide what to do. Heck, I can postpone my desire to have that, and I'm happy to move adjournment.
Yeah, it looks like that. Oh, they ripped it.
Okay.
That was your ride.
I reported the driver.
Quick.
They're gonna get me another one.
Okay, so we decided
Okay.
your absence. The
Yes.
chairman underwrites the deficit for the year.
So,
I have,
Mike off.
just to be, I have nothing, no questions, anything. If there's anything that I missed, I'm sure they'll get me up to speed. So in the interest of saving time, you can Zoom, and I'm so sorry.
so Mr. Kaplan, did you want to follow up on the question you had just asked?
Well, what I raised the question is whether we,
Can you turn your mic on? Oh, thanks.
whether we as an audit committee should meet alone with the auditors, which is common practice in the corporate world, without management.
I don't know if that's possible, but I will first confirm with our legal department regarding that.
I'll just note, for the record, like NYCHA is subject to open meetings law, which may not be universal. If the committee wants to meet in executive session, the appropriate motion can be made. Otherwise, individual meetings of the board members with each of Deloitte and management could be arranged. Anika, did you have any further comment?
We do this in the city audit, by the way.
So.
I cannot speak to what happens there.
I know, but I can.
Well, I think what he's saying is individually, we can meet with them, but not as a group. Is that correct?
I could not hear you, Mr. Vice Chair.
Oh, I'm sorry, I said that what you're stating, if I'm correct, is that individually, we can talk to Deloitte and get whatever information we need, but not collectively.
Unless an appropriate motion is made in accordance with the open meetings law that falls within one of the exemptions that permits an executive session to be held.
You can do it if we want to.
If an appropriate motion is made, you may meet in executive session with Deloitte. Otherwise, as you said, individual meetings can be scheduled.
Well, I mean, if we can do it, fine, but I won't be able to do it today.
All I would say is that let's, since we've got the advice we need from a lawyer, that there's a way of doing it, why don't we plan at the next meeting that we have a private session with the auditors and the audit committee, and then a session with management privately, ask management what they think about the auditors.
That motion will have to be made at the next meeting.
Yes.
Yes, not this meeting.
And fall within the parameters of open meetings law.
Okay.
Okay.
And I will confer with you before the meeting to get a better idea of exactly how it's gotta be done in order to be compliant.
That's right.
We will accept your suggestions for script.
Thank you.
And Jason also did mention that you are free to meet with the auditors individually as well.
Yes.
So nothing precludes you from speaking with the auditors. You just can't do it in quorum unless it's an open meeting.
Okay.
Okay, very good. I think we have that settled then. Is there any other business that we need to attend to today?
Gentlemen?
I move adjournment.
Okay.
Second.
Okay.
Aye.
All right, then that's been carried, and thank you all very much. It is now 12:09 PM, and our next Audit and Finance Committee meeting will be on September 13th, 2024.